Alrighty, hey, well, I'd like to welcome everyone tonight to the Hurley Investments Financial Services Commentary. This is Kevin Hurley, and I hope to spend 45 minutes with you tonight to an hour going through real life, what's going on and why, where things are moving and why, and uh, I guess, you know what, I'm going to reverse this. I'm going to take this part out. Let me cut this out. Let me stick it a little bit underneath. All right, guys, tell me really quickly what's happening this week and why. I'm anxious to see what you know and what's going on. Then I'm going to go through Disney, Apple, Baidu, Visa. What's happening this week and why? We have some small modulation on your voice, though it might just be me. All right, Abraham, it might be my side too, in all honesty. All right, today definitely had some Fed speakers today. What else did we notice about our market yesterday, though? I want to go over what's happening in our market yesterday because something happened extremely interesting. So earnings, Fed speakers, that's happening today. Comey getting fired. That is happening today. But something more important that affects our market in general happened yesterday. Someone tell me what that was. We have commodities getting crushed, French elections on Sunday. Okay, I'm still looking for something else because you know what? The French elections didn't matter. And I think someone said that, right? Didn't someone tell you a couple weeks ago it doesn't matter? Jobs, not quite. Something happened yesterday for the first time in 24 years. What happened yesterday for the first time in 24 years? VIX new low. VIX 24-year low. Now, here's my question to you. Is it complacency? Actually, I'm going to ask you this way. What is it that causes a 24-year low? Ah, that didn't help. What is it that causes that 24-year low? We are all in a coma. Great optimism. I would say complacency. Obama. George, you are my hero. Obama, it's always Obama's fault, right? The lowest VIX was today. Let's hit a couple of these things at a time. Is it complacency? Someone define, what do you mean by complacency? Thank you, Abraham. What is complacency in the market? What is this complacency we're talking about? If it's okay, I'm going to go ahead and put some of these in here. No fear of what, David? I'm going to just go overly bullish expectations. And that's the way I was going to say what you mentioned there, Maud, that just said, assuming everything will go up. Total passiveness. And we have Roy, lack of concern for risk. Geez, isn't that true? So let's go through a couple of these. No fear. Is it no fear because the Fed is buying the market? Is it no fear because companies are cash rich? Where does the no fear come from? No fear because we haven't had a pullback in 9 years, going on 9 years. What is this? What is causing this complacency? And just so you know, there's no real answers, but for those of you that wonder if at Hurley Investments we just book your money or put your money into something and then leave, this is the conversations we're having all day long. Probably the Fed backstopping everything. I do believe the Fed is now purchasing securities in an index form like they do over in Europe. Because companies don't make money, there's no perception of financial catastrophe. Abraham, I'd buy that. Expecting the market friendly reforms. Another good example. Market friendly reforms. Or other central banks are buying U.S. equities. Pretty interesting. Are all central banks backstopping the reserve currency, which is obviously the U.S. dollar? Backpopping. Backstopping. There's a bunch. I mean, the short answer is that makes the best sense. But can someone tell me, why are all these banks backstopping the U.S. dollar, not their own currency? Why would they all be backstopping their, why do they backstop the U.S. currency and not their own? Recommend reading for a different insight. So, I'm going to send that out so that everyone can grab that, Abraham. Because U.S. dollars is reserve currency, could be. It's better for their countries to have weaker currency. They can sell more. That is also very true. Um, I like what Roy said. Because U.S. dollars is international reserve currency, but more importantly, when the fears happened with Europe, all around the world, they started hoarding dollars. Anyone know how we hoard dollars? How do we hoard dollars worldwide? There we go. Purchasing U.S. Treasuries. U.S. Treasuries is a dollar equivalent. And since the 30-year Treasury is still netting about 3% yearly, they're hoarding it through U.S. Treasuries. And if you're China, Japan, the Asian countries, they were literally hoarding dollars. Kevin, what do you mean by hoarding dollars? Well, when I was in Brazil, and this goes back to 1995, I could get a premium to sell my dollars because of inflation risk and what they deemed back in that day as commodity risk. People would pay for those dollars knowing their currency will go down against the US dollar. So it was a rather interesting opportunity to see banks paying better than street brokers in Brazil to get a hold of US dollars, even if it was only a couple $100 from myself, maybe $300 or $400, that would come up. So yes, we have some complacency. In fact, if you're looking for a trade, a slightly out of the money VIX bull call, maybe 3 months out, could be a very profitable trade here in the near future. Michael and I, Keeve and I, Jeffrey T. Smith and I, and Jeffrey Dunning and I have spent hours and hours and hours researching facts and figures and commerce sites. We have done everything we could to find some facts and figures that give us a bit of an understanding of what's happening and why. Why here in the U.S. with rising interest rates do you see a company like Zions Bank go out and how am I saying this? Go out and lose 22% of its value in a rising interest rate environment. It was a rather interesting I'm not saying it right. As we did our research and to see Zions Bank fall from 49 all the way down to the low 40s in a rising interest rate environment where rising interest rates increase their revenue and doesn't change any of their fixed costs was shocking. On a very good earnings mix from both residential but most commercial and higher lending, we saw Zions Bank take a fall that is indescribable. Doesn't make a whole lot of sense, and you sit there and you scratch your head and you go, really? We're really going to fall from those 49s, 48's down to below 40. You scratch your head, and as you go through, balance sheet is fine, nothing changed except a rising interest rate environment, which also means some of those mortgage-backed securities that the Fed has, they are selling those back off and back out into the market. Those bundled of mortgage-backed securities are now going back onto the market, and so we might have a lag. If we take a look, middle of March, we had a lag, and it's extended all the way out for 6 weeks now till May. Most likely you have a Warren Buffett-like unfolding of U.S. securities, and you're seeing those securities going back into the market, and it's pretty easy because anytime Zions goes down to 40, it stops. You see it with Citibank at $57.50 and the $60. Bank of America runs up to about 25, maybe 27, falls back down to 23. It's very interesting for the understanding of saying, hey, there's some complacency that maybe we haven't seen in the U.S. markets for over 24 years now, which is kind of funny because I go back 24 years and just doing some, simple math, right? I already started to try to look and to say, hey, if we're in 2017 and we go back 24 years, we're talking about 1993, which was the first real recovery from the dot bomb, but there is a bit of a pullback that I remember seeing in 93. Actually, I'm sorry, 93 marks the bottom of a pullback of over 30%, I believe. So it's interesting because you sit there and you kind of peek at it and you look at it and you go, huh, I wonder, what are we missing? And I am doing as much research right now that I can to find out what's missing. With that said, I picked up some of the Disney shares. So I'm just picking up some Disney shares here to show you. Disney, I've got about 1.125 million in Disney in this particular account that I'm showing you. Sorry, it's about 1.3 million of the value. So last year, with us having some losses on some puts, I took some profits on Disney, hoping to see some people cash in on Disney where they've had it for 3-4 years now, with the cost basis down in the low 20s. Good year to take some profits, have it offset some protection that we had in place, raise that cost basis up so we don't get taxed ridiculously. But if we take a peek, what do you see over here on my Delta scheme? Let's look at my Delta scheme, right? What do we see here that that needs to be a heads up for us? What do you see on my Delta scheme for Disney? Hopefully you can see it. Yep. If I underline that right there, what do you see on my Delta scheme? Okay, let me ask it a different way. Am I Delta neutral, positive, or negative? Delta neutral, positive, or negative? I'm Delta positive, right? I'm only going to make up for the most part 2/3 of the downward movement. I've only got a 2/3 delta that's going to make it up. So the short answer is for every $1 movement, I'm seeing Disney going to fall down about $3,400, right? Well, Disney was down $3. So roughly, what is my loss going to be on Disney tomorrow? Abraham has it down to the penny. Yeah, short answer is I'm looking at a 10,000. Now my deltas are going to increase, but it's going to be a bit of an ugly looking start tomorrow for Hurley Investments in Disney. Taking a quick peek, where is Disney going to fall to? Where would you expect Disney to fall to? Roy says a 200-day simple moving average. Who's going to agree with Roy, or who will disagree with Roy? Roy, I agree with you. It's going to fall down to that 104 to 102 range. And it'll probably fall pretty quickly. So, kind of interesting because Roy has some money with me. If I go ahead and talk about it, Roy, are we excited about that opportunity for Disney to fall all the way down to 104? Yes, I love this man. I'm excited for it too. And it all comes down to this simple concept. We've got 11,600 shares in this group of accounts. I'm in that batch as well. And if I just go ahead and do some math here, if I see a fall where I got the right to sell at 115, so I'm trying to get some math here for you. If I have 1,000 shares, let's go ahead and let's open this up. Give me a quick second. I'm getting ahead of myself. So tomorrow, I could expect an 8,500 to 10K drop in accounts. But let's go ahead and let's put this into some thought process. Technically speaking, it can go down to the 104 horizontal level of support or the 102.50-ish 200-day simple moving average. I'm excited because it'll most likely fall pretty quickly based on past performance. So, I'm excited because I still have the right to sell at 115 and 600 shares at 113. Let's do the math. On 1,000 shares, I can sell at 115 for 115,000, and now buy back in at, I'm going to say 103. I'm going to say I can't catch the bottom. I'll be honest, you can't. 115,000 divided by 103 equals 1,116.5 shares. Or, in other terms, I just picked up 100 shares without having to call and ask for more money to be put into the account, so I can dollar cost average. I just dollar cost average the position without having to call and say, hey, let's get some more money, without having to go sell something else that maybe is profitable and buy into this. I'm able to do it with the expectation that down around 103, you're in good shape. The question was just asked, would you sell calls now that it is your yes. If we see a follow through tomorrow, you can sell a 110 short call. That would be where I'd be looking to roll some short calls. If you look at that position, I do have some short calls in place. Those are for some people that are newer that I was trying to build some positions for. But yes, I'm really ecstatic that I can get all of those rolled into a 110 for June, July, and maybe have some more money coming through. This is the power of collar trading. It's not sexy. It doesn't happen overnight, but this is the opportunity to get 100 more shares of Disney without having to go and ask for more money. Does anyone think that Disney's going to go out of business? Does anyone think Disney's going to go out of business? You're going to lose your money? Nope. Picking up another 100 shares today, what if Disney is double again in another 2 years? Roy just made the comment, the question being how long until it rises again? Well, that's a good question because it was intraday like 123 and change August of 2015. The neat thing is you've had 2 years of Disney going down. And the neat thing is there have been a couple opportunities where we've picked up 20, 30, upwards to a couple accounts, had 40% more shares of Disney added to their account. This is the beauty of collar trading. This is the beauty of being able to say, you know what, Roy? I don't know when Disney's going to come back. But it doesn't matter. I don't have everything in Disney. And what I do know is I've got some protection on the way down. Well, Kevin, what if you only have 500 shares? Well, then yes, I'm not going to be adding more shares. But I could add a leap long call if we only have 500 shares. If there's money in the account, then maybe 50 shares or 55 shares will be added, 100% paid for by the protection. And I'm going to have some money in the account to pick up the other amount. That is the beauty of collar trading. You don't have to be right. It takes market timing out of the equation. Well, Kevin, what if you start to sell off at 103 and it keeps going down? I might have a buffer between 103 and 100 where I'm just sitting in a short call, or I have nothing, just stock ownership. Because there's also a pretty strong support at 100. It couldn't get above 100 for forever. Where if it falls on that one, I might add leap short calls and 100 long puts at that point in time, where I know I can make every penny up until it gets back down to 86. So there's some of those questions and some of those understanding that you're going to look at and go, this is the thought process. This is where hopefully Hurley Investments clients know we're always looking at the market so you don't have to. Will our market end this week? I'm going to go with higher. And again, I'm just going to go with higher. Was able to do that last week because of big tech, Apple, Amazon, Alphabet, Apple. I keep saying the same things over again. Facebook. Big tech is moving right now. Cash is going into big tech for the end of this year, something fierce. Looking at the Dow, we're still bullish, but taking a peek at the chart, moving sideways again. Bullish, but range bound. So when you hear some of this, we're taking off to new highs. Well, not really. Well, we are on the S&P. We're at a new high, 2396.82. Well, I'm sorry, but at the end of last year, end of March, we were at 2498 intraday. So it's kind of funny. You got to take and listen to what you hear online, what you hear on CNBC, Fox News, Bloomberg. Not really. Not really happening. Now, what is a little interesting is here we have the NASDAQ once again overbought, bullish. And we're getting this separation, this just something to pay attention to. A move and then double from the 200. Last time we got that big separation, look how it came back down. We did stay separated for a while, but look how it came back down to test some of these, where you don't see the price. So again, I would expect to see some things pull back here, which is the comment against a comment that said the VIX can remain low for a while. It's just simple technical analysis on a valuation basis. We're getting ahead of ourselves again. Expectation, maybe a good trade. A VIX slightly out of the money. You know, an 11 VIX out in June or July might be one to let it sit and see if you can't catch something in the next 2 to 3 months. All right, pretty slow week by way of earnings. In fact, we get back into Thursday, Friday. Dillard's, Kohl's, Nordstrom's, JCPenney. You're going to see some Crocs on Wednesday. You're going to see some retail numbers coming at the end of the week. Economic reports relatively quiet. Retail sales could move the market on Friday. Internationally, we're done with France, so we're getting back to China. CPI, PPI inflation today. Thursday, we have the Bank of England announcement. Sunday, industrial production, retail sales will run our futures for Monday. How am I looking to trade? I'm still sitting with protective puts or callers. I have started to bull put Apple, Visa. I'm going to have to bull put NVIDIA. There's some bull puts that I'm looking at to move off. I did not get to my new. I've got five new news events I'm taking out there that I will show you. And with that said, what questions do you guys have, or what questions would you like to go over today? What questions would you guys like to go over today that I could spend the time with you? Roy said no, and Roy, you might have said no about letting the stock go for a bit. It takes a bit of experience to see if you're going to get a small bounce. And normally when you get that 15, 16% downside movement, you have a Fibonacci or a buy-in. It's this Fibonacci retracement, it's herd mentality. You could see a pretty good buy-in occur there where things start to take off, even if it's for a bit of a dead cat bounce. Abraham, can you explain the bull putting you mentioned? You sell puts on protective puts once earnings has passed. Correct. For example, I've got $45 June long puts on Apple. And I also have $48 short puts for like 67 cents. I'm starting to do weekly short puts against my long puts. So I guess it's a bull put calendar, trying to knock down the cost on those long puts. I have 87.50 May long puts for Visa. I have shorted $90 May long puts against Visa. So Visa just has a large credit, a January 18, 92.50, $4.60 credit that will be the protection as I am bull putting earnings long puts that were in play and as stocks go higher. So no, I'm not trading bear puts at this time on the SPY or the Qs. You can make a justification for it on the Qs, but for the SPY or the diamonds, it's range bound between a pretty tight range. So I wouldn't have a justification that I would feel comfortable bear calling or bear putting a top line support level. And that really comes back down to, Ida, the complacency. Right now our VIX is so low. Our VIX could shoot up on worry and we could finally get some more credit again in some of our positions, but you would not see, you might not see the movement in the market at the same time. You could see very small, and it's what it's done in the last couple months, you could see very small movements in the market overall, yet see the VIX shoot up, back up to 16. I guess that wasn't happening. Back up to 14 with some very small movements on the VIX. So just something to think about, that because mathematically something is backstopping the market. And it's funny because it's not the Fed raising rates, but something is backstopping the market. It's kind of, I don't also see why the Fed would want to raise rates. With how much debt we're in, and what we have to borrow to pay down our debt or to pay off our debts, I don't know why we would want to start borrowing now at higher prices to pay off or to roll those positions. I do see. We finally think we figured out the reason why you're not seeing the banks take off higher with a rate hike is for the fact that you see the Fed unwinding its balance sheet. So as stocks start to take off, you saw a big run on Bank of America and it came right back. Obviously, you're seeing the Fed roll off banks off of the balance sheets or their quote unquote mortgage-backed securities. Okay, Roy, would you consider taking VIX spread trades in our account? Yes. I would definitely, and it wouldn't be something big, but you could see instead of hedging on the SPYs, I might be looking at spending $1,500 to $2,000 on a $100,000 to $200,000 portfolio, just to put a little hedge in place for higher volatility in the next 2 to 3 months. And it's something I would be looking to do for a couple of different accounts, my own included. All right, guys. Hey, any other questions that you have today? I got to tell you, summer is just starting. Having some warmer days on about 80 chickens. You see egg counts go from 24 to 36 to over 60. Kind of getting excited because we're having a pretty good run on chicken eggs right now at the Hurley farm. Not to mention it's beautiful weather. All right, hey guys, if no other questions are coming in, I would like to thank you for being here today. Apologize, I've got that up in front of us. I'm going to add in those news events, and I will post this on myhurleyinvestment.com. If I can, I will put the recording in as well. If I cannot, there will be a link to the recording at my YouTube site. Guys, I appreciate you being here tonight. Hopefully this is helpful for you. It's pretty interesting. This kind of gives a whole new level of service to clientele. Most clients can't talk to their advisor except on a yearly basis, and I hope this gives some of you the ability to say, hey, I appreciate being able to talk to you. I appreciate having you here. Only 17 here tonight, and really looks like Abraham, Roy, Ida, you three were my bigger type question people tonight. Thank you for not being shy and asking questions. Until next week, guys, take care of yourselves and have a great week. Bye-bye.